So Eric Balkunas had this great post. Look, the industry, the RIA industry, advisor industry controls about 30 trillion, 30 trillion. And let's say 0.1%, buy an ETF, Bitcoin ETF. That's 30 billion. Well, 30 billion on 500 billion, that's not very much, but it's not 500 billion. Remember, it's probably 100-ish of the 500 that is the free float. So 30 on 100, that would move the price. Price would go up. But what if it's 1%? Forget 10 basis points. What if it's 1%? 300 on 100, then we get that parabolic spike we had in the last run where we went from 10 to 50.
Earlier this year, Mark Yusko, the founder, CEO, and chief investment officer of Morgan Creek Capital Management, predicted that crypto summer would begin on June 15, a very lucky call since it coincided with the same day BlackRock, the world's largest asset manager, filed its spot Bitcoin ETF application with the U.S. Securities and Exchange Commission. The announcement caused a flurry of exciting activities that caused a massive price spike, with Bitcoin moving from $25,121 before the announcement to $31,474 about a month later on July 14. It's been 2 months since that exciting peak, and prices are now back to the region they were before BlackRock. Yet Yusko is still positive that it's still crypto summer, a period which typically marks rising prices in the cryptocurrency industry. According to renowned hedge fund manager, the increased volatility in the market is similar to the little disturbances summer brings. Plus, this is no ordinary summer. It is the first time Bitcoin and the overall cryptocurrency industry have been really up against a chaotic macro environment in the United States. The U.S. Federal Reserve is still intent on more interest rate hikes after taking rates up at the fastest pace in U.S. history. The central bank's activities have already caused significant damage to the economy, and many experts believe the indicators of the coming collapse are about to start appearing in buckets. One such indicator is the increasing number of Chapter 11 bankruptcy filings in the United States. According to reports, Chapter 11 bankruptcy filings jumped 68% in the first half of 2023 from a year earlier. In the first 6 months of 2023, decades-high interest rates and sticky inflation claimed many casualties, including notable names like SVB Financial Group, Bed Bath & Beyond, Party City Holdco, and Lordstown Motors. In a statement, American Bankruptcy Institute's executive director Amy Quackenboss noted that the growth in filings is reflective of more families and businesses facing surging debt loads due to rising interest rates, inflation, and increased borrowing costs. The situation seems to be worsening in the second half of the year. According to a Bloomberg report, business failures spiked in August, increasing nearly 17% compared to the previous month. The report, which references data from Epic Bankruptcy, further notes that we've now had 13 consecutive months of total bankruptcies logging year-over-year increases. Yusko notes that all these macro uncertainties are causing liquidity issues, which are affecting all assets, including cryptocurrencies like Bitcoin. We will now bring you clips from Mark Yusko's recent interview with Altcoin Daily. But before we do, help us improve the video's visibility through a few simple actions. Please hit the like button, share the video with others, subscribe to the channel, and don't forget to drop your comments in the comments section below. Thanks, enjoy the video.
It's been a very strange summer, right? If you follow my cycle logic, which I've been talking about for a while, we transitioned from crypto spring to crypto summer on June 15th. And, many people, when they hear crypto summer, are like, oh, good, that's the big up. Well, actually, no, that's crypto fall. So crypto fall, that period kind of right after the halving is when you get the really big parabolic moves. Crypto summer is kind of a funky period. It's generally upward trending, although very slight. And in fact, a couple of the cycles have been pretty flat-ish. They're still generally up. And I have been positive in the sense that, or I've been positively inclined, we've been making higher highs and higher lows. So again, the trend is generally up, but this latest move down in Bitcoin sub 26 is starting to get close to that previous low, which, look, if we break that, then the trend changes.
Are you looking for the next big crypto project, something huge that will keep you properly positioned for amazing opportunities before the next bull market? Then you should consider Islamic Coin, a Sharia-compliant digital asset designed to create ethical finances and crypto. This cryptocurrency is for Muslims and everyone who wants to be involved in a project that prioritizes ethical business practices. The project is launching this September, so you have every chance to make some X from this one. Despite being relatively new, Islamic Coin has quickly garnered the interest of the global Muslim community. It currently has the largest Muslim crypto community on Twitter with over 1 million followers. Considering that there are around 2 billion Muslims worldwide, developers suggest that if only 3 to 4% of this massive community invests in the project, Islamic Coin could easily become a trillion-dollar asset, just like Bitcoin. Due to its instant popularity, Islamic Coin has raised $200 million in a private sale, plus another $200 million from ABO Digital, very impressive feats despite the bear market. In addition, there are several members of the UAE royal family on the executive board. Click the link in the description below to download Hack Wallet and be able to get your Islamic coins and follow the official account for important updates, especially potential airdrops.
Things are looking depressed, other than hash rate still really strong. Transaction volumes are okay, but the buzz is definitely down. You don't hear people talking as much about it. Maybe that's just the revamp of Twitter. I'm not going to call it X, by the way. And engagement's down everywhere, and people aren't really going there as much. I find myself spending more time on LinkedIn, actually, which is interesting. So that's a long rambling answer to say summertime is normally, actual physical summer is normally a time of lower volatility and lower volumes because people are out. And I think that was true again this year. Now, the difference between traditional markets and digital asset markets, regular markets, when people are away, things just shut down because the markets are closed more hours than they're open. In the digital world, people can trade anywhere. So in theory, even if you're on vacation, you got your phone with you, you can still be active. But I just feel like there was a lull, and yet we've had some meaningful positive announcements. I think we'll talk about some of them. But generally, this is a meandering time, kind of approaching the halving next spring. I would probably lean toward liquidity. Liquidity drives markets, and I've said that for forever, and it's really true. And particularly in digital space, particularly take something like Bitcoin, right? 1 Bitcoin equals 1 Bitcoin, always will, and it eventually, we all hope, becomes a unit of account the way we think about value. But that's not what people talk about, right? They talk about Bitcoin in something else. In dollars, usually, that's the number most of us talk about. But if you're in Argentina, you're talking about it in pesos, and that's making new highs lately because the peso's in the toilet. If you're in Argentina, you're talking about it in bolivars, or in Turkey, you're talking about it in lira, all of which are down. Those are down. So Bitcoin in those currencies is up. But the rate of change of dollar growth has slowed, and therefore, you think about it, right before the pandemic, we were in that $14,000, $15,000 range. They doubled the money supply, so we should be kind of in the 28-ish range. And we're kind of in the 26 range, so it's kind of where we should be if we think about it in Bitcoin per dollar. So in the absence of a lot of monetary stimulus, there's not a lot of translation change that's going to happen.
According to Mark Yusko, the absence of a lot of monetary stimulus means there are not a lot of people buying up assets, which generally translates to lower or stagnant price actions. This, the renowned hedge fund manager adds, is one of the reasons why the cryptocurrency market is not really performing as expected. With most people cutting back on their savings having expended their savings from the pandemic savings, Yusko says macro is leading downward, and we might not see big improvements anytime soon. But there are still 2 big events Yusko and other crypto enthusiasts are looking forward to in 2024. The first is the approval of at least one spot Bitcoin ETF, which will be followed closely by the 2024 Bitcoin halving. The approval of a spot ETF will cause massive adoption by investors, which will increase the demand for Bitcoin. The halving, on the other hand, will have the Bitcoin block reward, bringing it down from 6.25 to 3.125 Bitcoin per block, which translates into reduced supply. Both events will certainly have huge impacts on Bitcoin's price. Here are more clips from the Yusko's interview.
It's certainly mass adoption. So for sure. So, and let's just do math. So Eric Balkunas had this great post. Look, the industry, the RIA industry, advisor industry controls about 30 trillion. And let's say 0.1%, buy an ETF, a Bitcoin ETF. That's 30 billion. Well, 30 billion on 500 billion, that's not very much, but it's not 500 billion. Remember, it's probably 100-ish of the 500 that is the free float. So 30 on 100, that would move the price. Price would go up. But what if it's 1%? Forget 10 basis points. What if it's 1%? 300 on 100, then we get that parabolic spike we had in the last run where we went from 10 to 50. And that could definitely happen. Now, all of this is in relation to fair value. So fair value today, somewhere around 50K. That's based on the Metcalfe's law curve. We're below that, obviously. So we should accrete toward that fair value between now and the halving next year. The halving potentially doubles the fair value, because if the price doesn't rise, then the miners go out of business. That's probably not going to happen. So what has happened in history is fair value rises, price rises, and we get slow accretion to that. So now we're talking, could that see a parabolic move from 25 to 100? Sure. And do you blow right through fair value and go to overvalue? Probably. What precipitates all of that? Adoption. And if 300 billion, which is only 1%, starts flowing in, now the converse of that is there's 20 billion in GBTC that if GBTC doesn't get approved, and let's say BlackRock does, is all of that 20 billion going to liquidate? Probably. I mean, probably if you're paying 2% and you can go pay, I don't even know what BlackRock's charging, but call it 50 basis points. Maybe it's less, but call it 50 basis points. You're definitely selling GBTC and you're buying the ETF. So if only 10 basis points comes in, we got 30 billion in, we got 20 billion going out. Oh my God, the price could actually stagnate or God forbid, go down in the short run, because people would freak out because there wasn't this big rally after the approval. I think that would be temporary, because even if all of GBTC liquidates, which it probably will, that's only 20 bills. Whereas I do think the adoption is going to be 1, maybe even 2%. Now we're talking 300 to 600 billion. That's a big move up. So mass adoption for sure. How fast? That's another question.
At the moment, all breaths have been held in expectation of the Federal Reserve's reaction to Wednesday's CPI data. Economists are estimating a big gap between the overall increase and the core reading, primarily due to the increasing gas prices. Bank of America analysts expect a 5.9% jump in energy prices to fuel a 0.6% overall increase in the inflation data, but they are predicting only a 0.2% month-over-month increase in core inflation, which excludes increases in food and energy prices, and is the Fed's preferred inflation metric. Do you think the Fed will go through with its promise of keeping rates high until inflation drops to 2%? How do you think that will impact prices going forward? Please drop your replies and comments on Yusko's Bitcoin predictions in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and check out our other videos featuring insightful clips from Yusko and other prominent participants in the cryptocurrency industry. Thanks for watching.